The Canadian Securities Exchange presents your go-to source for trends in junior and small cap markets. Each month, join host Anna Serin and financial expert Bruce Campbell in partnership with Stockhouse.
Welcome back to The Market This Month. I'm Anna Serin, and each episode we take a step back from the daily headlines to look at the bigger forces shaping capital markets, particularly across Canada's growth sectors and the public companies accessing capital both at home and abroad. This month, one of the most consistent signals in the market is the continued strength across commodities. What began with gold, silver, and copper has expanded further, with renewed momentum in lithium and iron ore. The breadth of this move suggests something more structural is underway. Investors positioning for long-term supply constraints, infrastructure investment, and the role of hard assets in an increasingly uncertain macro environment. At the same time, market leadership is broadening. There's noticeably less focus on the mega cap names that dominated headlines last year, and more attention shifting towards mid cap and small cap companies. For Canadian markets in particular, this matters. Historically, these are the areas where active capital allocation, disciplined execution, and access to financing can translate into outsized returns. We've also seen volatility in Canadian energy, driven in part by geopolitical movements, including the U.S.'s involvement in Venezuela. Whether those market reactions are fully justified remains an open question, especially when weighed against underlying fundamentals and longer global energy demands. Overlaying all of this is an ongoing macro debate. Markets continue to move higher even as economic data sends mixed signals. Consumer sentiment remains cautious. Central bank commentary continues to evolve around rates, inflation, and leadership at the Federal Reserve, and yet risk appetite persists. That continued disconnect between economic perception and market performance is something investors are watching closely, and in some cases, treating as a contrarian indicator. Despite this uncertainty, capital formation remains active, and increasingly, Canadian issuers are raising meaningful sums in the United States, aligned with dominant global themes. On the CSE this month, we saw new listings that included Upside Gold, a company advancing gold and copper exploration in British Columbia, as well as Predictive AI, applying artificial intelligence and data analytics to real-world fleet and asset management challenges. On the issuer news front, we saw Trulieve complete a $140 million upsized private placement, reflecting renewed investor interest in U.S. cannabis amid political momentum towards decriminalization. Norsemont closed an oversubscribed financing with strong strategic partnership. Aduro Clean Energies completed a $20 million U.S. underwritten IPO in the United States, and Nextech3D.ai announced an acquisition expanding its enterprise AI event solutions. We've also seen Sol Strategies launch a sizable U.S. at-the-market offering tied to blockchain infrastructure and the Solana ecosystem. All of this is unfolding alongside major political developments in the United States and ongoing instability in regions like Venezuela, factors that continue to shape sector sentiment, capital flows, and investor positioning. With that context in mind, let's take a closer look at what's driving markets this month and how investors are navigating these themes. Welcome and thank you for joining us for the first episode of 2026 for The Market This Month. I am joined by my wonderful co-host, Bruce Campbell with Stonecastle Investment Management. Thank you for joining me, Bruce.
Yeah, I can't believe it's 2026 already. It's flying by.
You know, I just went through my calendar for 2026 and I already got myself to December. I feel like I've already lived it, but here we are in January, just at the beginning. We ended off the year last year. I think it was mid-December that we got some information out to our guests. And there's shockingly, normally January is a little bit quiet for news, but it has been a busy month, wouldn't you say?
It sure has been so far, yeah.
There's been lots to pay attention to, lots happening in the market. I think a lot of it is fairly positive. You're going to help us break that down. We're going to talk about commodities again this month. It was a trend we talked about, I think, every single month last year. I think this is really great for the junior and growth markets when commodities are doing well, just because we have so many companies focused in that area, and there's some great opportunity. Within the commodity sector, there continues to be strength in gold and silver and copper. You're going to touch on lithium is seeing some strength as well, and iron ore. What is this telling us about the broader market? So tell us about the continued strength that we're seeing and what's going on with lithium and iron ore.
I mean, the strength in the commodities has been fantastic. And as you mentioned, from a capital markets perspective, it's really brought life back into the markets in areas that we haven't seen life in quite some time. I've talked to a number of different CEOs and people who are involved with public companies, and they just have a completely different tone to their speech and to their demeanor than they have in multiple years, because now there's commodity prices. It's a little bit easier to raise money. They have lots of news flow. They have access to capital to advance projects, and it's just a completely different environment. So it's fantastic to see. And, as you mentioned, what we have noticed is that, commodities tend to move kind of one after the next. And, we really saw this move in gold. We saw silver really take charge here, in the last quarter, in the first part of 2026. Copper's moving along. Now we're seeing iron ore, we're seeing lithium breaking out. And to me, that really signals that perhaps this slowdown that China's been in for the last year and a half or so now is starting to come to an end, and that you're starting to see demand from that area, and that is moving into the commodity markets and driving things higher. At the same time, we continue to see that US dollar, and it's been on, the fairly steady downtrend since really after the tariff were announced there, and since then the dollar's dropped. And of course, anytime the dollar moves down, commodities tend to go in the opposite direction. So it's been kind of interesting to see, and I think that that's what it's showing us.
Okay, we talked about this last year. The dollar moving down is there's some purpose behind that, right? Trump is intentionally trying to lower the value of the dollar. Is there maybe one of the reasons, because I think there's many, is one of the reasons to help this growth within the commodity sector and the markets?
Yeah, I don't know if he's specifically targeting those markets with that lower dollar move. It has more to do with, kind of economics and payments and pricing power for those countries. But certainly that has an impact. And it also has an impact in that if the US dollar is weakening, then for sure with gold and maybe platinum and palladium, is that those are then used as an alternative to those currencies. So maybe they're not necessarily always thought of as a currency, but in this case, they probably are. People, including central banks, are starting to hold those as a currency reserve.
Okay, interesting. Well, listen, I think it's great, especially in the growth markets that we see in Canada, that we continue to see this happen. We're in January, and in Vancouver, we have the annual Vancouver Resource Investment Conference, AME Roundup, as well as the Metals Investor Forum. So it's a really busy week in Vancouver in the resource sector, and then we move into March in Toronto for the PDAC conference. So it's a busy time, I think, in the resource sector in general in Canada. So it's nice that we have this percolation happening, I think. And one of the things that I talked about in the intro is some of the issuers that we're seeing do some really big raises in that sector. And a lot of the raises that they're announcing are oversubscribed. So to me, this seems like really good sentiment for the space.
Yeah, 100%. We've not just seen those oversubscribed, we've also seen them, the size of the raises have been bumped up as they're doing the raise.
Yeah, they just continue to get increased demand, which is really great. Okay, let's talk about some market leadership that we're seeing. There's times of the year where we focus, or the news is focused very heavily on the Magnificent Seven, but we're not hearing as much about them. So tell us what you're seeing there.
Yeah, I mean, if you look at the Mag 7 for, probably an 18-month period there, they were the leaders, and they were all moving together. And now we're seeing a bit of bifurcation there for sure. Nvidia is still as strong, but it's not as strong as it was. It's pulled off its high, and we're seeing, we are really seeing a broadening happening now in the markets. So, if you look at things like industrials, especially in the US, you're seeing, rails and transportation stocks that are now moving up and in a lot of cases breaking out. And, we just didn't see that before. And so it is encouraging that we're seeing this broadening out, because that sector rotation is really the lifeblood of bull markets as money transitions from one area to the next.
Is that what you would call a more risk on appetite from investors?
Yeah, I mean, for sure, because you're going from the Mag 7, which represent, I think it's 40% of the S&P, and now just by nature of moving away from them, you're coming down cap. I mean, Nvidia is a $4 trillion company, so anybody below that is coming down cap if you're taking money from Nvidia. And so I think that's positive when you start to look at other areas and see that that growth.
It's interesting. The market cap of Nvidia is, I think, larger than the GDP of Canada, isn't it?
Yeah, that's probably right.
Yeah, which is it's just an interesting thing to try and wrap your head around. But anyway, I think again that's great that we're going to start seeing maybe some more flow go into the small cap space. Now, the small cap space in the U.S. Is still fairly large companies. It's not like the growth space in Canada, but it still is great to see the money trending in that direction. Okay, let's talk about Canadian energy. We talked about Canadian energy at the end of last year, and that we were seeing some great flow into that sector. But you saw it sell off a little bit in Canada, and you're wondering if that has to do with what we're seeing happening in the U.S. Tell us about that.
Yeah, I mean, what we saw was after the news was announced on the weekend about Venezuela, the following Monday, Canadian energy was very weak. You saw that across the board, especially with a lot of the heavy oil producers that kind of rely on sending their heavy oil down into the U.S. And it's a bit of a knee-jerk reaction because from a lot of the research that I've read and looked at, it's talking about in order for Venezuela to replace what would come from Canada and from our energy sector, it would take about $1 trillion at least,
$1 trillion,
and more than 10.
Yeah, and probably decades of investment.
Yeah, at least 10 years,
yeah,
and some massive infrastructure just to get to the place where they replaced, I think it's 3 of the 4 million barrels a day that come from Canada into the US. And so it's one of those things that, some of these companies will continue to operate and do fantastic things for a number of years before they're even potentially affected, if you even get to that place.
And let's also keep in mind that so in Venezuela right now obviously is very oil rich, but it's still currently in the ground. And as you mentioned, infrastructure investment time also means what is the place of the U.S. in Venezuela in 10 years? We don't know what it'll be in the coming months. So it does feel like it was a knee-jerk reaction. I mean, I don't even know if going down there for the oil was his sole purpose, but do you think that that'll make its way back to Canada and we'll see a correction there?
I would think over time you're going to see people come to that rationalization that, this isn't something that's going to affect even near term or intermediate term profitability with these companies, because it's just going to continue. And so to our conversation about commodities and rotation, in the past, when you have seen gold and silver move up and then copper, you tend to see a rotation into oil. And so it'll be interesting to see, kind of what happens, especially if when we look at those other derivative commodities that are now starting to move, as to whether or not China is behind that and sort of global demand. And if it is, then you would expect that, oil would be increasing just based on supply and demand imbalance.
Yeah, absolutely. Okay, well, we'll keep watching that. Okay, on the note of the U.S., let's talk about some political movements that we're hoping to see in the coming months, rates are trending lower and leadership changes will be happening. I don't think at the time of this recording that has not happened as of yet. What should investors be watching closely there?
Yeah, I mean, this has been a common theme for us is on this show, and that's really the inflation trend. And I mean, if you look at the inflation trend, it looks like, for the next 6 months, it's going to have a downward trajectory in the U.S., which is really positive on a number of fronts. One is, just from a pure cost of living standpoint, but also from an interest rate standpoint. If rates continue to come down, that brings the inflation target that the Fed is looking at back into line and allows them to lower interest rates. And at the same time, we're going to see in May, we're going to see a transition over of Fed chairman. We haven't seen who's going to be announced yet, but when we see that that transition, then at that point in time, the market's going to be thinking and looking for that person and kind of what their sort of macro policy is on interest rates. And most people expect that based on the fact that Trump is appointing this person, they're going to be certainly more friendly to rates in the future.
Right. Well, I mean, that seems to make sense. It'll be interesting to see once that person comes into place. It seems that when he does bring new people into office, there's a relevant shakeout in the markets, I would say. Wouldn't you?
Well, there certainly has been in the past, yeah.
If we look at a trend that we've seen over the past year. Okay, so I just want to finish off on this discussion around the U.S. I feel like the U.S. is top of mind as we start the year for the Canadian markets. While we were going through our issuer press releases, looking at the new issuers coming to market, looking at the capital raises that were done, we saw a few trends. One was we saw oversubscribed placements most of the time. So an issuer goes to raise money, and then they announce, hey, we had so much interest, we were able to raise more. And we also saw that a lot of this oversubscribed placements or a lot of the financings that were done are either through their joint, they're listed on the CSC, but they also have a NASDAQ listing, or they're doing just a general raise down in the US. So one of the questions I think we asked ourselves last year is, with all of the stuff going on with the tariffs that Trump was imposing, with all of these movements that are happening down there, and perhaps a bit of a shakier relationship that we have with them, will our issuers still be able to access capital there? Well, it seems starting the year a resounding yes, right?
Yeah,
So
I
is
mean,
that
that's been the case for sure. Yeah.
Yeah. So do you think, so I guess my question is, A, were you expecting this? And B, do you think we'll continue to see this?
Well, it's that broadening out, right? We talked about that. And, if we continue to see a broadening out of overall markets, investors are always looking for, where there's, bargains and value. And part of that is, in our Canadian market, we've seen the US so strong for multiple years. And now, there's more people who are willing to look at Canada as they start to try to discover where the next, 10 bagger comes from, right?
The old 10 bagger. Okay, well, look, I mean, I find it very exciting if our issuers are able to raise money across the border. We have a very unique relationship. Maybe you can touch on that a little bit, that we don't have with any other country, with the US. That is unaffected by, Trump's administration. That is that we have essentially fungibility with the U.S. So if you buy and sell stock in Canada, it crosses the border more easily. Is that the best way to describe it? That you can, I'll let you jump in there.
Yeah, exactly. I mean, the stocks have the same, identifier CUSIP number, and you can trade them in whichever market they trade in, and settle in Canada or the US, and it's all fairly straightforward and done on a trade plus one basis, and it's super easy, yeah, for sure.
And we don't have that with any other country. So there's a real opportunity because, I mean, the equity capital available in the state of California is more than we have available in all of Canada. So there is great opportunity. I think we still have very good relationship with the capital markets across the border, and it's very easy. So hopefully our issuers continue to be able to raise capital there, and we can build out our growth opportunity together.
Yeah, I mean, it's a huge advantage for Canadians for sure.
Yeah, and I think we also saw that in the cannabis space, really, because cannabis is still federally illegal. A lot of the cannabis companies that came out of the legalization process, which happened on a state level, not on a federal level, they came to Canada to become public companies, because if they touched the plant, they weren't allowed to list on a US exchange. So they came to Canada. So I think we got a great opportunity to participate in a market that maybe we wouldn't have normally had that much access to. So I hope that continued opportunity grows from both sides. Bruce, as we go into February, what are your thoughts? What should investors be paying attention to?
Well, I mean, the big thing that we're watching is this rotation and the sector rotation to see, if there's going to be new leadership that emerges as the calendar changes over. We've started to see that already. We touched on the fact that the Meg 7 certainly hasn't been as strong, and that, now the market's moving down cap. And even if that means, moving from 4 trillion down to, $1 trillion company, or a multiple, $100 billion company, and then that just keeps trickling its way down into other markets and other areas. We've talked about Canada and how the companies here have been successful in financings in the US. So that rotation is something to keep our eye on. The gold and silver will be really interesting. There is kind of more interest and more, I would say, froth potentially in that sector. And with, kind of where the volatility of those sectors are, they do bounce around a lot. And so that creates opportunities for, kind of shorter and intermediate term investors as well. So that'll be something to watch, in throughout the year and in the next few months for sure.
I love it. I love it. Well, I'm excited to start off yet another year with you, Bruce, and look forward to having our chats monthly. I hope we can get you to Vancouver as much as possible so we can do this in person. And thank you again for all of your wonderful insights. I really appreciate it.
Yeah, great to get episode number 1 in the books.
In the books. Hopefully we see you in person next month. And until then, thank you for joining us at the market this month.